Joining us now on Open Book is Kurt Wagner, award-winning business and technology journalist for Bloomberg. But what a book. Okay, this book is called Battle for the Bird. Great title. Jack Dorsey, Elon Musk, and the $44 billion fight for Twitter's soul. Well, I don't really know where to start with this, actually, because I read the book. I felt like it was a little bit of a thriller and a page-turner. You're probably too young, Kurt, to remember Barbarians at the Gate. Do you remember Barbarians at the Gate?
Fun story. I'm reading it as we speak.
Okay, so there you go. Okay, yeah. So for viewers and listeners that are younger than me demographically, that's a story from 1988, 89 about the takeover of RJR Reynolds, which was an old school tobacco and Nabisco biscuit company. And what a battle of egos. And here we are 35 years later, and we're reading about what I would call a web sort of Barbarians in the Gate. Do I have that right? I mean, that's how I felt. That's how I felt about your book.
That's part of why I'm reading it, actually. Someone else made a similar comparison, and I had read bits and pieces of Barbarians at the Gate, but it's a long book. It's like 500 pages, and I never made it through, I have to admit. But I was like, well, if someone's going to be kind enough to sort of liken my book to that one, I really need to give this another chance. And so I picked it back up. I'm a little more than halfway through it right now, but I think you're right. Like, there's a lot of similarities in the sense that it's a leveraged buyout. This ultimately is what Elon did, a leveraged buyout of Twitter. And, a ton of personalities involved, competing, opinions about where this could or should go. And so I do see why the comparison gets tossed out, which is flattering. I will say it's a great book.
Well, I'm glad someone else felt the same way. I love the book. That book went on to become an HBO series. I predict you're going to get picked up. I know you did this in the middle of the writer's strike, but my guess is the story is just too good, Kurt. And I also often tell my authors, I don't like giving away too much of these books because I want people to go out and buy your book. The purpose of my podcast is to introduce an author, get people excited about reading. And I feel you did so much homework and research on this book. We owe it to you to read it. But let's start with you for a second. What made you pick this? It's a crazy struggle when you get down to it. You had to put it all together. What made you decide to write the book first? And then we'll get into a little bit of it.
Well, I wanted to write a book about Twitter before Elon came into the picture, to be honest with you. I'd been covering Twitter for almost a decade at this point and always sort of thought, well, if I was going to go the book route, Twitter would be a logical subject for me. I've just covered the company, and the story is actually quite interesting and captivating even before Elon showed up. And so I had, set my sights on writing this sort of Jack Dorsey Twitter book. And as I was out pitching it to publishers, like literally the same week I was out pitching this book idea to publishers, Elon showed up as the largest shareholder of Twitter. And I continually kept sort of telling myself, well, I'll just add a chapter to the end, or, okay, now I'll add two chapters to the end. And eventually I got around to the idea that it was like, okay, this is a totally different story than I had originally set out to sell. And you'll probably see in the book, there's really it's two parts. Like the first half is really the pre-Elon years, and a lot of things that happened that set up the opportunity for him to show up and buy this company. And then the second part of the book is really when Elon arrives on the scene.
So, I'm gonna say something to you, and I want you to react to it. Okay. So I was at Goldman Sachs for 7 years. And, I believed that I was going to start my own business. I remember telling my dad, who was a blue collar worker, I said, Dad, I'm going to start a business. It's going to be great. There's going to be no politics. There's too much politics at Goldman Sachs. And then Kurt, the minute I had like 6 employees, I had politics, and then I said, and we're going to be doing things differently at our firm. And then the minute things got hectic, I went right to the Goldman Sachs playbook and compliance book and replicated it. And I find fascinating about your book is whatever you think of Dorsey and his team, they put in some protocols and they put in some ways of doing business and some guardrails. Elon is a genius. There's no question about that. He thinks differently than all of us. He's arguably one of the richest people in the world. But do we sometimes get our ego in play to the extent where we think we know better than people who actually may be more experienced than we are in a field that we're looking at?
Yeah.
What say you?
I would agree. And I think in Elon's case, the issue was actually that he tried to take a playbook that had worked for him at Tesla and SpaceX and sort of force it on Twitter, even though the problems at Twitter are just so different. They require a totally different type of thinking and skill set, right? They're more of a like soft skill problems, communication, human interaction, speech, free speech, those kinds of things. And Elon approached it like an engineer, and he was like, we're gonna sleep at the office, and we're gonna run as fast as humanly possible and get these things shipped as fast as possible. And I just don't think that the playbook that worked to get the Tesla Model 3 out the door, for example, is the same playbook you can use at a company like Twitter. And, we saw that, in my opinion, be a major problem for him in those first couple months after the takeover.
Okay. So we have an engineer in Elon Musk. We have this sort of maverick Bitcoiner in Jack Dorsey. They seem similar to me. Is that a problem for them in terms of the way they clash with each other, or what am I missing? Let me rephrase it. What is different and similar about Elon Musk and Jack Dorsey, and describe their relationship to our viewers and listeners? How's that?
Sure. I'll start actually with the differences, because I think they're more stark, which is just the management style of these two guys, right? So Jack Dorsey, as we learn in the book, he's introverted. He doesn't like making decisions. His management style is essentially to be hands off and let the people who work for him run the show, while he sort of serves as this advisor, at the top, more of like a big thinker type guy. And I never got the sense that he really wanted to be the CEO of publicly traded companies. It's sort of like something he almost fell into, which is bizarre because he had two of those jobs at the same time. And then you look at Elon, right? And he's someone who moves incredibly quickly. He's very decisive, not always the right decision, but he makes a decision and he goes for it. And, he is the ultimate decision maker. Like, the people who work for him are implementing his vision and not the other way around. So in terms of differences, that's where I feel like management style is very different. Now, where they're similar, they're both founders, they're both technologists, they're both incredibly rich, right? So they have this freedom to think about things in a way much longer term, much bigger picture than most of us do, because we just don't have the financial freedom to sit around and pontificate, where's Bitcoin going to be in 20 years because you're trying to pay rent or whatever it may be, right? So I think where they sort of aligned was that they had this big sort of grand idea of what Twitter could be. And I think there were some similarities in their visions for Twitter, even if the way that they chose to execute it, were very different. And so this was a relationship. I've spent a lot of time in the book, as you know, like focused on this relationship, because I feel like without Jack Dorsey sort of encouraging Elon to buy Twitter and sort of welcoming him to come in and buy Twitter, I don't know if a deal actually gets done. And so that's why I spent so much time talking about those two guys.
Yeah. I mean, listen, they're two brilliant guys. My next follow-up question there, and I'm going to go in another direction. I just turned 60 this year. Somebody asked me, what's my observation? I sort of feel like people that have earned this amount of money, something happens to their brain. It's almost like the old drug commercial. When I was a kid, they used to crack an egg and say, this is your brain. And then they would put the egg in a frying pan and say, this is your brain on drugs. I feel that money does that to people. I feel like it smokes their brain a little bit, where they think that they're superior or they think that they're smart. I'm watching it with some billionaires in sports. They believe that they know more than the baseball or football or hockey operators. Am I missing something, or do sometimes rich people get in the way of themselves as a result of the ego of being rich?
It's funny you say that, because a colleague of mine just talked to me about the book last week in New York, and literally she called it billionaire brain. She was like, what is this billionaire brain thing that happens to people? And I think you're totally right. And I think it's two things. Well, it might be more than that, but I've identified, I think, like two main things. The first is you're reluctant to surround yourself with anybody because you kind of lose trust with most people, right? They're either trying to get something from you, or they're trying to manipulate you or whatever. So I feel like people isolate themselves a little bit more when they get to that point, because they don't trust many people. And then
there's no question. You're fearful that people are climbing onto you for money or digging gold on you.
Exactly.
I understand that.
So then you have a smaller circle, and people want to be in that small circle. So then the other thing that happens is they don't actually give you any real feedback, right? They just agree with everything you say, or if they do give you feedback, they do it in a very gentle way that might not even change your opinion, right? So we saw this with Elon in particular when he was taking over Twitter. He had this sort of small group of advisors he brought with him, personal friends, relationships from other companies. And everything that I heard was essentially he'd sort of have a bad idea and they'd be like, yes, that's the best idea ever. Go forward, go do that. You should totally do it. Instead of someone being like, well, wait a minute, let's think this thing through. Like, this might not actually be a good idea. But when, you have a small group of people and those people just continue to encourage every idea that pops into your head, I think it's, creates that billionaire brain thing because you're no longer getting the feedback you probably need.
I mean, it's just fascinating, right? Billionaire brain. It's interesting because, and by the way, all of us, billionaires or not billionaires, we can get our egos into our decision making. I certainly did that when I joined the White House. I had this vision of me working for the president and blah, blah. And of course, it didn't work out for me. But I do feel that I put too much of my ego into the decision making. And it was very costly to me. So that's a cautionary tale for people that I get out of your book. Let's go to the following equation. Jack Dorsey's indecisiveness plus Elon Musk's impulsiveness equals what?
Yeah. Well, the indecisiveness was a major problem for years because Twitter simply didn't innovate fast enough. As a result, it didn't grow fast enough and its business lagged behind. So this indecisiveness is one of the key reasons that Twitter was in a position to be acquired, right? It had not achieved its potential because, in my opinion, Jack Dorsey as the leader was not making these affirmative, decisive decisions. Flip that on its head with Elon and the impulsiveness, and you see the destruction of some of the stuff that was actually, in my opinion, working at Twitter. So even though Twitter was a small business, they had a pretty stable, solid brand advertising business, right? A lot of big brands wanted to be on Twitter because it's where people talked about the Super Bowl and the World Cup and the Oscars and all of these things that are happening in real time. It was a great complement to watching on television. But Elon Musk's, I guess, ability or inability to filter himself ultimately has scared off a lot of those advertisers because he goes on Twitter and just tweets whatever pops into his head. And there's a lot of people, marketers, who don't want to be associated with that, right? So where Jack's slowness kind of set Twitter up, struggled business-wise, I think Elon sort of not reading the room and understanding that his own impulsive behavior has a negative effect on the company is destroying the business that they have right now. And so obviously two different approaches, but two very similar outcomes, which is Twitter is underachieving as a business in both cases.
Okay. So this is a central thought of mine. Free speech. You're for free speech? I'm assuming you are. You're a journalist.
Of course, yeah. Yep.
Okay. So I'm for free speech. But help me. Okay, because I had to take con law in school, and there's a lot of different types of speech. Some of it's protected, some of it isn't. Obviously, hate speech wouldn't be. I can't put you in harm's way. The proverbial yell fire in the theater. What does Elon Musk get right, and what does he get wrong about free speech on his new business, formerly known as Twitter?
I think what he gets right is probably that Twitter 1.0, had probably over-indexed on its rules, right? Quite frankly, I think we have the benefit of hindsight now, but you look at what happened in 2020 with COVID and the election and the reaction to the election from then President Trump, and we saw Twitter really get a lot more strict on its rules. And I think in the moment, given the severity and the extreme things that were happening, I think it to some people it was justified, right? And I think you could look back now and say, well, maybe they were a little too forceful with some of that stuff. And I don't think it's crazy for Elon to come in and say, I feel like there are too many rules and I want to sort of, rescind some of these. I don't have a problem with that. But what I do think he's missed is the fact that the rules exist not just, for the company to feel good about itself. There's a business reason to have these things, right? more users want to show up at a place where they feel safe, where they're not going to be attacked, where they are not going to be exposed to, ridiculous conspiracy theories or whatever. And so there's a business reason to have some of these rules. I don't think, he has really thought that through. Or if he has, he just says, well, we're just going to suffer the business consequences of letting people sort of say whatever they want. And, people are free to leave, of course, if they don't feel that the place reflects their own values. And that's what some of them are doing. And so it's just I think what I've learned from doing this book is how difficult the balancing act is, right? You want to uphold free speech. You want to let people say what's on their mind. But at the same time, you got to build a business, and a business requires some level of pruning, right? And some level of kind of cleaning these things up. And no one has really succeeded in navigating that perfectly. I don't think anyone would, to be clear, but it's just a really tough thing that I don't think outsiders fully appreciate. They feel like the service should reflect whatever they personally believe, and anything else is wrong. But those beliefs are a huge,
well,
huge
we're in
spectrum.
that society now. We're in that tribal society now. So we want to play to the band or sing to the chorus, that sort of thing.
Yeah,
I learned so many different things from your book. I'm going to start with a couple, and I just want you to get your reaction.
Sure.
What did I learn from your book? I learned that these things are way more complicated, aren't they? Setting up free speech. You just set that as an example. I learned that this deal could have been very successful for Elon Musk because he is a great innovator, but he went in the wrong direction, as explained in your book. How did he go in the wrong direction, if you believe that's the case?
I do. I feel like what Twitter was best at, and maybe this is unique to, your position, one-time position in the White House, what I do for a living, but like Twitter was great at news. Like if you cared about news, Twitter was the place you went. You had to be there. You had to have an account. And I feel like Elon has sort of said, he's got beef obviously with the media right now, certainly like sort of the mainstream media. And I kind of feel like he's saying, I want to make this less useful for news, because I'm going to stick it to, some of these journalists who have been either critical of me or who he disagrees with. But the problem is that was what made Twitter super sticky and unique to people. And so I get the sense he's sort of gone away from the thing that it was best at. And, you add that on top of the business struggles we talked about with the advertising and sort of how Elon has run off some advertisers. I think the idea of subscriptions actually isn't a bad idea, but I think the way he rolled them out as quickly as he did without thinking through the potential ramifications of taking away check marks, for example, or selling check marks without any kind of identity verification. Like these are the kinds of things when I said he moves fast, but almost in a reckless way, like these are ideas that could have worked, in my opinion, had they been handled very differently. I just feel like the execution was poor.
Okay. Last thing on this topic of what I learned. You can really damage a brand. And you could put a brand in a non-recoverable position. I'm not saying he's not going to be successful with X, but when I look at X today, it is very different than what Twitter once was. And so I want you, for our viewers and listeners, to describe, again, your opinion, what Twitter once was with Jack Dorsey and what X is today under Elon Musk. It feels like a totally different experience to me. And I've been on the platform for 15 years. So tell us what you think the differences are.
Yeah, I think if you just look at the actual product, I don't think it looks that different. I don't think the way you interact with the app is all that different. But the feeling you get on the app is totally night and day different, in my opinion. And again, I think Twitter used to lean very heavily into the "it's what's happening" slogan or tagline, right? You would expect to go there and see the discussion at the top of your feed be about, today or this week would be State of the Union, right? We're about to hear the State of the Union from President Biden. And you would think, okay, there's sort of what's happening in the US today. Therefore, that's what's going to be at the top of my feed. What I think Elon has tried to do, and what he's actually said publicly, is that he wants Twitter to be the most entertaining app that people use, right? So it's no longer, in my opinion, about usefulness. It's not really about opening it up and getting exactly what I feel that I need that day. It's more about feeling entertained, right? So I see, tons of memes on there. I see tons of videos that have nothing to do with like news or what's happening. They're just sort of recycled videos that are either, head scratchers or they're funny or whatever it may be. It kind of feels like he wants to be like a TikTok light or something like that, where you're more scrolling to be entertained than you are to be informed. That's my personal opinion. I'm actually curious, since you're a user yourself and you said you've seen a difference, like what's the difference in your mind between the two? Because again, the product itself feels sort of similar as in the way that you use it.
Well, I feel certain things are boosted. Maybe I'm wrong. I think the good news for me is I was shadow banned on Twitter. I was a Trump supporter. And so I got shadow banned. And so I got unclipped from that. And so I was modulated and throttled down to a low ability to gain followers. He very fairly unclipped that. And so now I get followers, and my stuff that I tweet out reaches a lot of people. And so I wasn't in love with that about Twitter, but I feel like there's a lot of boosting going on of conspiracy theory, maybe.
Yeah.
I feel a lot of sludge is on there, a lot of nonsense, made up stuff. I feel bad about this because I really don't believe Elon Musk is an anti-Semite, but I do feel there's a lot of anti-Semitic activity going on Twitter now, way more than there was prior. Okay, and this is the problem, though. Someone like Elon Musk, people don't want to say that to because they don't want to offend him, and he's a powerful guy, and blah blah blah. You know what I mean? But I mean, totally. if I was sitting in a boardroom with him, I'd be like, look, you've done a really good job of trying to flatten the playing field between conservatives and liberals, and I respect that. But we probably need to clean up on aisle 7 of all the conspiracy theories. I mean, you think the Rothschilds run the world? I don't think they do. But if you follow X, you've got a good 10% of the tweets that come into my field of vision. The Rothschilds are running the world. That's a anti-Semitic trope that's lasted 300 years. I'm not in love with that.
Well, and that's the trade-off between the free speech and the cleanup, right? Is like,
that's true.
Example of one, right? But like X is less interesting to you. I'm sort of speaking for you now, but and and partly because they are not policing in the way that old Twitter did, right? And so, but old Twitter over policed, and so now you're sort of like, okay, how do we, draw that line? How do you find that balance? And again, everyone's going to be different, but that's the fear, is that the more you let people say whatever they want, and say, I might not agree with it, but it should be allowed to be on there. Well, people just don't want to be surrounded by that stuff, right? And so they use the product less, or they leave altogether. And this is the dilemma that Elon will continue to face.
Okay, so before I brought you on, and before we had the recording start, we know that Fidelity, I believe, who made an investment alongside of Elon Musk, at a $44 billion valuation, marked the investment down to $12 billion.
Mm-hmm.
Okay. You think it's worth $12 billion?
There's a lot of debt on those books still. You have to remember that Twitter took on about, I want to say is like $12 billion in debt to get this deal done. So, and which they're paying back, for many more years. So 12 billion honestly feels a little high for me. We don't know exactly what the revenue is because it's a private company, so they don't share that. I had a story in December that said that they were targeting around $2.5 billion in advertising revenue last year, which was down almost 50%. So, you see a company that's bringing in, if we're generous, maybe $2.5-3 billion in revenue, but has tons of debt on the books, and as you point out, a lot of other kind of cultural problems right now. I don't know if you could sell it for 12 billion. Maybe I'm being too harsh, but it seems a little high to me.
Okay. So, but he's not interested in selling it. So let's fast forward a second. Okay. Here's a guy that took, it's one of the big misses in my life. One of my best friends, Antonio Gracias, was on the board of SpaceX and Twitter. Now I think he's just on one of them. He gave me the opportunity to invest 20 years ago. And of course I was too stupid. He went on to become a billionaire. and I'm talking to you on open book. See, that's why I'm really not that smart. But he's a lovely guy, and I would never bet against Elon Musk. And so we know that Tesla and SpaceX were on the brink of bankruptcy 16 years ago during the 2008 financial crisis. And he went on to become the richest or one of the richest people in the world. And he is a brilliant guy. So it's at 12, maybe less today. Where do you think it will be in 5 years? You think it's lights out for X? You think he can turn this around? What do you think?
I agree with you that I don't think it's going away. I mean, I don't foresee Elon throwing in the towel or anything like that at this point. One theory that's sort of interesting, I don't know if you follow it, but he has an AI company that he's just spun up, XAI, which makes Grok the chat GPT type competitor. Mm-hmm. And they're using Twitter data, or X data, I should say, to train those models. And there's an interesting idea about sort of folding X, the social network, into XAI, and making it the training ground for the AI products that they ultimately build, but sort of take the pressure off of X as this like standalone thing that might need to become profitable, because it's now more of a feature of this other AI company. And I think that's something that could very well happen. And that's a good outcome, I would say, or I would guess that would be a very good outcome for investors too, right? Because now suddenly they're sort of on the AI wave instead of this fledgling social network that no one's really sure what to do with. And so I could see Elon being creative, trying to do something like that to try and sort of save the financials of this company. I just worry that X is going to become less and less relevant over time unless they can kind of figure out how to fix the problem that you were just talking about, right? Which is that a lot of people feel that when they go on, they see stuff they don't want to see, and it makes them use it less and less. And so they got to figure that out. Otherwise, I'm worried the relevance is going to be a problem.
Okay. We're at the point in this podcast now where I have 5 words. My producer and I would come up with them. And then we ask the author to react to these 5 words. It could be a sentence, a word, sort of like a Rorschach test on your book.
Great.
You ready?
Let's do it.
All right. I'm going to say free speech. You say what?
Complicated.
Really complicated, isn't it? It's fascinating, right?
It is.
You can get a lot wrong being a free speecher.
Yeah.
I'm going to say Elon Musk. You say what?
I'm going to say has some work to do.
Right. I say resilient, brilliant, visionary. Now, he's human, so he has flaws like the rest of us.
Totally.
And if I were a friend of Elon Musk, which unfortunately I'm not, I would love to be, but I would say, hey, surround yourself with some say no people as opposed to just yes people.
Yeah.
Jack Dorsey.
Ooh. I would say kind of the villain, honestly. Like part of the story here is this rise from Jack Dorsey as being a beloved kind of person within Twitter, beloved to employees, sort of the face of the company in many ways, to, being a bit of a villain to at least to people who feel that they're disappointed in the way that Twitter has gone. So, I want to be clear. This is not all Jack Dorsey's fault by any stretch or anything like that, but I do think his story arc has sort of gone in the wrong direction over the last couple of years. And so that's why that word popped into my head.
It's interesting, it's because I see him and I have empathy for him, because I'm not well suited to be the White House communications director. I may be decent at talking on TV, and I may be decent at managing money, but I'm probably not well suited for all the muck and guck of politics. And Dorsey's a visionary, but is he the best operator for a business like that? Maybe he isn't, maybe he's just straight outside of his circle of competence. I don't know, but I have empathy for him. And I do love the fact that he was wearing that Satoshi t-shirt, Kurt Wagner.
At the Super Bowl.
Okay. Yeah. That was good for me.
Okay. One other word. Sorry, if I could add one other quick word. Please. I almost went with idealist, because the other thing about Jack is like, he really does have this sort of pure mind in terms of where he thinks a lot of these things can go. It's just they don't always materialize in the way that he would want them to.
So I totally see that. Okay, I have two last words. You ready?
Yep.
Twitter.
No longer.
Okay.
Twitter's dead. Yeah.
Okay. So Twitter's dead. And so then the next word is, or the next letter is X.
Yeah. I knew that was where this is going. Um, I'm gonna throw X a bone, and I'm gonna say X is everything app, because that's what they want it to be. Now I don't know if it's gonna succeed, but when I think of X now, to Elon's credit, he wanted to kill Twitter. He's killed Twitter in my mind. Twitter's gone. X is here. X is gonna be something else. I don't know exactly what it will ultimately be, but they're trying to turn it into this everything app. So I'll go ahead, and that's the first thing that popped in. So
Okay. Well, he's looking for a money transfer license here in the
yes,
state of New York, and he's going to allow you to do telephone calls over that app shortly as well.
yeah, yeah,
I'm not betting against Elon Musk. I would never short the Elon Musk freight train because I don't want to end up like one of those 1920 silent movie villains.
yeah.
You know. But
No,
you wrote an amazing book, and I really wish you great success with this book
thank you.
because it's got everything. It's got intrigue, it's got ego, it's got business, and it's a book I hope business school professors pick up as well because it is the barbarians of the gate of your generation. Our generation, it's mostly your generation though, and it's called The Battle for the Bird. It's Jack Dorsey, Elon Musk, and the $44 billion fight for Twitter's soul, written by Kurt Wagner. And it was a real pleasure to have you on Open Book today. Thank you, sir.
Thank you for all the kind words. I appreciate getting the chance to talk about it.
Bitcoin is sound money. Bitcoin will be at the root of what we call the autonomous economy. There's a technological revolution. We've just started. We've really completed the age of information, and we're going into a new age, what we call the age of autonomy. And it comes by through a cluster of innovations: IoT, artificial intelligence, robotics, and blockchain. And I would say that IoT creates a massive amount of data. AI can be used to synthesize that data into knowledge. Robotics use that knowledge in the physical realm to generate economic activity. But it's really that blockchain is going to be able to use that knowledge to generate economic activity without human intervention. That really is the moat or the competitive advantage in this new technological revolution.
Okay, so joining me now on Open Book is James Diorio and Jack Ryan. Let me say it again. Okay, so joining me now on Open Book is James Diorio and Jake Ryan. They are the authors of Crypto Decrypted, which is a great book. It's debunking myths, understanding breakthroughs, and building foundations for digital asset investing. Sorry, there it is. Okay. And Rick Edelman, a good friend, wrote the foreword on this book as I'm dropping my microphone. Awesome stuff, guys. I really enjoyed the book because it lays out in a really easy to understand format what everything is. What is an NFT? What is the blockchain? What is a layer one technology? It's all here. And so all you have to do is buy a copy of this book. And you get it all. Okay, what is digital scarcity? I mean, and to me, when I read the table of contents before I started the book, that's my first thing I always do is read the table of contents, see what the hell's in the book. I said, all right, these guys are answering the questions that people want to know. Even people in our industry would benefit from reading your book because they pretend that they know things that they don't, myself included. I really didn't understand the whole NFT marketplace until after I read Crypto Decrypted. So let's start with the two of you and your background. So Jake, you go first. Tell me about your background, how you met James, and then James, you tell me.
Yeah.
I know your background, but
Perfect.
I want my viewers and listeners to hear your background, James. But you go first, Jake.
Okay.
I almost called you Jack in the introduction because I was thinking of Tom Clancy.
Yep.
And
I've gotten that one, and I've gotten the Jake Ryan from 16 Candles. So all good references, good movies. My background: I got a degree in computer science from the University of Texas at Austin. I focused in artificial intelligence. I did some research work in the field of AI around using neural networks for computer intrusion detection. I went out and got my first job was with MCI, which doesn't exist anymore, but it was a S&P 100 telecommunications company, and then started a consulting firm in the early 2000 aughts and did that for 15 or 16 years. I started to get into angel investing and venture capital in 2014. I worked as a mentor with a venture firm out in LA. I did my first blockchain venture investment in 2015. I bought Bitcoin for the first time in 2016. And then really thought about, one of my passions was investing. And so, venture capital is a lot about pattern matching and about understanding what's about, what's going on and some trends and investment themes. I did a lot of trading just for myself in stocks and options. And so James and I had been going out with a hedge fund manager for dinner once a month for many moons. And he said, well, you really understand this industry, and you have some good returns in history where you could prove that you could invest and trade. And so started a hedge fund and crypto hedge fund in 2017 and 2018. And James started out an advisor, and you can hear about him.
Yeah, go ahead, James.
Yeah. My story is similar. I computer scientist. And was a technologist the first part of my career, but really moved into becoming an operator. So built 5 businesses, bought 2, sold 2. And, Jake and I worked together originally, around the year 2000, and kept in touch for that period of time. And how I got here is I never expected to be in this space. But in 2016, Jake said to me, Jim, you need to go buy some Bitcoin. And it was $674 a coin. But I was way too smart for that. I looked at it and I didn't understand it. And I said, Jake, this is nuts. You're nuts. Good luck with your crazy crypto thing. And when I sold my business in 2017, I said, gee, maybe I'm nuts. And maybe it's me that's the problem. So I took a year and I went all over the world. I went to conferences in Dubai. I was in the EU, all over the US, Toronto, and I digested everything I could. And I became convinced of 2 things. This technology was going to absolutely change the world, but people didn't know how to explain it. And I would go to conferences and people would use all the right buzzwords, but I'd say, what does that mean? And they couldn't really unpack it. So ultimately this led to, becoming an advisor for Jake, and then, coming on board with the fund and growing the fund with him. But that's what led to, Crypto Decrypted, which is the second book after Jake's first book, Crypto Asset Investing, The Age of Autonomy, designed to explain this. The first book is almost like a textbook. The second book, Wiley said, could you write one for humans? So we kind of wrote it. I love that you have your mom at the end of the podcast. We wrote this for our moms. We wanted our moms to be able to understand this space, because I almost missed it because I just didn't get it. And this is going to touch everyone on the planet, and we want people to understand it because this isn't going anywhere. As a technology, obviously there's an investment opportunity, but it's a technology that's going to shape everything.
Well, first of all, I put you in touch with my mom. She'll never understand Bitcoin, just so you know. We barely got her off the rotary phone. She does have a touch tone phone, but it's like one of those wall units that you would remember from the 1980s. Alex Keaton used it in Family Ties. But I'm with you. But I want to give you each a chance to make the elevator pitch, though, because why would anybody need? I mean, I know the answer, but I need you to give the answer. Why would anybody need a hedge fund? Why not just buy Bitcoin and go long Bitcoin or long Ethereum and shut the lights out for 5 years?
Yeah, sure. I think we tell our LPs definitely buy Bitcoin. We think Bitcoin is great. Bitcoin is sound money. Bitcoin will be at the root of what we call the autonomous economy. But money is required, but not sufficient. There is a technological revolution that we've just started. We've really completed the age of information, and we're going into a new age, what we call the age of autonomy. And it comes by through a cluster of innovations, IoT, artificial intelligence, robotics, and blockchain. And I would say that, IoT creates a massive amount of data. AI can be used to synthesize that data into knowledge. Robotics use that knowledge in the physical realm to generate economic activity. But it's really that blockchain is going to be able to use that knowledge to generate economic activity without human intervention. And that really is the moat or the competitive advantage in this new technological revolution. In the age of information, it was about getting specialized knowledge. It was about if you'd become a lawyer or a podiatrist or a computer scientist, you had specialized knowledge and you could turn that into competitive advantage and generate an income. In the next technological revolution, in the age of autonomy, it's really about building autonomous operations. We have knowledge now democratized with things like ChatGPT. Anybody can write a program with ChatGPT if you go and use it for a few iterations. And so what's going to be the compelling technology in this technological revolution? And you need to be able to build autonomous operations. And that's what is the innovation stack is what we invest in. And so right now we don't have mutual funds for that yet. And so if you want to take a diversified fund approach, hedge funds are your opportunity to do so.
And I'll add on to that really quick is, innovation is where wealth is generated. We look at Bitcoin as a wealth preservation asset, much akin to gold, right? Paul Tudor Jones just came out with another endorsement. You've got BlackRock and Fidelity, and all these guys are saying, hey, this is a gold that's better than gold. And Bitcoin's gone from a penny to 69,000, a 69 million % gain. We're not going to see that again, right? We'll see gains, but not at that level. But the innovation stack is where you can get real multiples. So that's what we focus on, and we think the real opportunity is. And it's based on, as Jake said, the age of autonomy thesis. But here's what's hard. There's 10,000 different crypto assets out there. How do you know what to invest in? How do you know what you want to jump into? And then once you do, candidly, do you have the stomach to ride it through? Because, we're dealing with markets that are volatile. Right. So we look at the window and look at how these things are going to grow and look at the opportunity to take advantage of the overall innovation stack and, provide that value to our investors. And that's where we're going to get multiples we're just not going to see in Bitcoin anymore because it's still so low on the adoption curve. People still don't largely understand blockchain technology and what it is. Right. Companies are adopting, but it's still very, very young. It's like the dial-up modem age still of this technology.
Okay. I mean, obviously I agree with everything you're saying, but I want to give you a chance to say it in your own words. I think that the great thing about the book is how clear it is. Okay. So I want you both to give me an example from the book, and I want you to speak with the clarity, frankly, that you speak in the book. And so let's talk about something that nobody understands. Okay. We'll start with you, Diorio. Okay. What is a Byzantine general, and what is the Byzantine general's problem?
Okay, perfect. This is the thing that nobody's talking about that everyone should talk about. And this is why we wrote the book. There's a lot of books on how and what. We wanted to write a book on the why. Why does blockchain technology matter? So it matters because it solved an unsolvable computer science problem. And that's called the Byzantine generals problem. And it was a top 10 unsolvable computer science problem. And so it says this, and it's got a scary name. Byzantine means you'll never understand it, but pretend it's really simple. It gets a bad rep. I've got 10 generals, 10 generals, and they're going to attack a city. If they do it together, they win. If they don't do it together, they lose. That's a pretty easy problem, right? The question is, how do you do it without anybody in charge? So how do you get peers to work together without someone calling the shots? Right? How do you know that the communications they send to each other are reliable? How do you know that they can act in concert? And normally, in the digital world, that's never been possible. You've always got a counterparty. Your money says whether you can, your bank says whether you can send a wire, or PayPal says whether you can send money. Or a video game says whether you can actually use the magic cape or something from the game. And That's not how we work in the physical world. If you were sitting right next to me, Anthony, this is a $20 bill. I could hand this to you. You can take it. I pulled it out of my pocket. I hand it to you. There you go. Take it. It's yours. And you're done. You don't have to ask the government, your state, your business partner, your wealth manager. We can just do that. We can transact in the physical world. And now we can do that in the digital world. I can have a digital thing. I can prove it's unique if it's unique, and I can transmit it to someone else just because I want to without the interference of a third party. It's frictionless and it's peer-to-peer. And this is why blockchain matters. This is what makes everything possible. And the reason we talk about this so much is a lot of people are scared of this space, but once they understand this innovation, they see what's happening and there's an opportunity here. Now, again, the problem is, as I mentioned earlier, we're in the dial-up modem age, right? Remember back in the dial, you unplug it from your wall, plug it into your modem, and 2 minutes later you get some stream of data, and you get that. Who knew that would evolve into the phones we carry today, or the smartphones that we have today? Everyone wants to get that in blockchain today, but we're still in the dial-up modem age. Jake, this was a part of your history, right?
Yeah, I mean, I can just remember in the mid 90s working for a ISP, people would call in from all country of Texas saying, I just bought the internet. Can you help me, get connected? And, we would have all these problems with connectivity in the internet age back then, but we still could envision a PCS, or personal communication system, or personal communication device. And we thought, we'd be able to stream movies and all these things that we could do. But we couldn't do it for another decade, right? It took that long before we got the iPhone or a smartphone. We had Blackberries, but really the iPhone was
not the same.
That marked improvement. And so that's where we are today, where we can envision what the future is going to be like, but we're still dealing with, technical constraints. And it's just all part of the adoption curve. It just takes some time.
So I want to be the skeptic now. I'm 60, because I actually am 60, and I'm a blockchain skeptic. I'm a traditional finance person. And yeah, the Byzantine general sounds cute, and you did a great job of explaining it. But really what you're talking about is just financial blather. It's mathematical blather. It has absolutely no use cases. It has absolutely no, there's nothing, it's not worth anything. Okay, go respond to that.
Okay, so when Uber came out,
I just have to point out that I don't believe any of the shit that I just said, but I'm trying to, okay, I need you to respond. Okay.
You gave out the straw man. So when Uber came out, they came out with a new business model, and it was a different than we had been doing business prior before.
No question.
We'll call prior businesses called pipeline businesses, where they might have owned either the sales or the demand. Like if you were a hardware store, you owned a bunch of supply of hardware, but you didn't own the customers, right? It was a pipeline business. And what Uber did was to come in and provide a different type of business, a two-sided marketplace, where they owned both the supply and demand, and created a marketplace where they could meet in real time. I have a bunch of drivers and I have a bunch of people who need to go places, and they created the most efficient business model. And that business model has an unbelievably competitive moat, right? Many people have tried to break into, let's say, Facebook, right? Google Plus came out. It had better technology, but Facebook was able to keep on all of their users because everybody had already uploaded their photos and they didn't want to convert to another network. We call those network effects. And so Google did not win. Facebook continued to win. Even when they bought Instagram, they would fight Snapchat because they were able to come out with, mimicking the same functionality that Snapchat had, but they already had the network effects. And so this type of model has revolutionized business and operations. Well, tokens are really just efficient two-sided marketplaces. They can generate a protocol that allows supply and demand to come together in a real-time market. And that's the most efficient way to build an Uber company. In the future, all of these Uber type companies, these two-sided marketplaces, are going the most efficient way to generate both the production capital and financial capital of that company is through a token. And so many services are going to be delivered on this. I'll give you one example. There's a token called Render. Render allows for, if you have a smartphone and you have some GPU power that you'd like to give to the platform, you can rent out your GPU power, and Render will aggregate millions and millions of phones and computers and GPUs, and then users can use the Render token and use it to maybe get a lot of compute power to generate training for an AI agent, or render a metaverse that takes a lot of GPU power. So they can do that within this token structure. You know, they don't need a storefront and board of directors and all these things to deliver this functionality. It is the most efficient way to deliver a two-sided marketplace. And in the future, when autonomous operations become the competitive advantage, this is going to be the mechanism and vehicle that allows business transactions to happen in the most efficient way possible.
I gotta carry you around with me, Jake. Okay, you I feel like I just gonna pull the back of the string in your back and let you rip like that, because I think it's very solid explanation. James, let me turn to you for a second, okay? I'm gonna hit you with 3 questions at the same time.
All right.
So give me 3 different paragraphs. You ready?
Yeah.
What's going to happen in regulation for crypto? Okay, could regulation still kill it, or is it beyond being killed at this moment?
Mm-hmm.
Is crypto bad for the environment? And are we in a crypto bubble?
Okay, got it. So perfect. So regulation. We need regulation. You know, regulation is not going to kill crypto unless we get regulation that is designed to kill crypto. The state change that's happening right now is, look, this is an innovation stack. And, you know, part of the reason people are still having a hard time getting their hand around is we call them cryptocurrencies. I hate that word. They're not all money. They're technologies, as Jake mentioned, and they can do different things. We need regulation that's appropriate for this space, right? You know, we had Congress passed the joint House bill to overturn SAB 121, and then it was vetoed by President Biden, and that was a mistake. Yeah. That was movement that was going to go ahead and allow banks to custody this. We need to empower our institutions, our banks, our businesses to use this technology. And here's the issue, Anthony. If we don't do this, the U.S. is going to fall behind as an innovator, and that's what's happening now. We're seeing, obviously, we have an election coming up. Trump has come out very pro-crypto, but we see that Kamala has now turned a corner too, and she's embracing this, including, making a change with our not-so-friend Mr. Gensler over there at the SEC, and that's really important. We need to get individuals in office who are going to embrace this, or the U.S. is going to fall behind, and we can't afford to fall behind. What's going to happen is our thought leadership will leave the country. It'll go to other places where it is regulatory friendly. So is it going to kill it? If we set it up to kill it, it will, but we turn that corner. We need the right kind of regulation to promote innovation, and we've always done it as a country. And it's time we do it again, and I think we're finally getting to that point. So that's very exciting. All right, so that's my spiel on regulation.
Okay.
And by the way, we've got Fit 21 coming up. We've got other bills coming. We've got things happening, and there's a lot of senators who are really going to make this happen.
Go to the environment.
All right, so the environment. A lot of people talk about, and that's one of the big shell games, that this is really, really bad. Every new technology, right, is going to come forth, and it's going to have some type of impact. The Bitcoin blockchain is very energy intensive, but it still uses less than half the energy used by the banking industry or the gold industry. It's kind of one of the things that we like to talk about. as a shell, or as kind of a straw man argument. The reality is that this is going to move us to being more efficient. Necessity is the mother of invention. Elon Musk was pro Bitcoin, then, oh my gosh, it's bad for the environment, I'm anti Bitcoin. And then, right, he formed the Bitcoin Energy Mining Council. Well, what's that about? That's about getting into renewables and using different types of energy and driving different types of energy. We've got hydroelectric. We've got flare gas, which is used for mining rigs. We've got wind. And being able to do these and have mining operations in different areas where they can be decentralized will actually promote getting new types of energy into the world. So we think it's actually going to drive forward the innovation. And by the way, just about every other blockchain out there is not the energy suck that Bitcoin is. You know, the Bitcoin blockchain is a proof of work. A lot of energy is expended. Ethereum, proof of stake. Other layer ones, different consensus mechanisms that are not so energy intensive. So we think it's going to really be progressive and make some change. So that's very important.
Okay.
Is that too? By the way, one other thing interesting. Look what's happening with energy right now. Microsoft is lighting up 3 Mile Island again, right? Because the energy that's going to be required for AI, for all of these things, for our data centers is going to be staggering. So we have to get to new levels of energy. And we're seeing it. And that's not even Bitcoin or blockchain related. That's AI related. So we're seeing this happen across the board. All right. And that was, what was your third one?
Bubble.
Is this a bubble? No, it's not a bubble. It's a cycle. People have been, there's an old Mark Twain quote. The rumors of my demise have been greatly exaggerated. Someone thought he died. They published that. He responded with a telegram. People have been predicting the downside of this since it started. And the reality is now it's been embraced. It's been embraced by the biggest asset managers in the world. BlackRock manages $10 trillion in assets, right? 10% of the world's investable assets. They're behind it. Fidelity is behind it. You've got 83% of the Fortune 500 are adopting blockchain technology. So that's very interesting. You've got Citigroup, which has an FX product they're launching on a blockchain. Franklin Templeton is launching a money market on blockchain. And then you've got companies like Starbucks and Walmart and FedEx, which are all experimenting with it. So the technology is getting adopted. What we need to do is realize that this is an innovation, and the innovations take time to mature. It's not 10,000 types of monies and we need to pick which one is going to be the next big money. Forget about that. This is an innovation stack. We need to go forward. And the thing that's interesting about this is we've seen consistent cycles. We've seen these cycles go, and we're entering another one right now. And the big driver for this is the monetary cycle. The big thing that we're seeing right now is liquidity being pumped into the system. We just had a rate cut. They're expecting another one coming up in November. And they've seen a very clear correlation to how these markets move with liquidity. Right, and we're seeing global liquidity. We're seeing with China, right, pumping money into the system. We're seeing rate cuts across the world. So as we enter this loosening economic cycle, this should actually drive the next phase of the run. And we're expecting that will kind of go till, call it roughly February 2026 is kind of our target right now. So, and that's going to be the next bull leg. Now, nothing goes up in a straight line. We will have a pullback. That will probably happen when we see quantitative tightening happening again. So we've seen direct correlations between what's happening with the macro cycle, with the monetary cycle, and everyone wants to predict doom and gloom. Things go up, things go down. What we're looking at is where are we going to be in 18 months? And if I reasonably believe that's going to be a move forward. By the way, sun just came out here. I look very dramatic on camera. If we think that's going to be a great move forward, right, in our markets, which we do, it's a great time to invest. But the point is, we're past the point of no return. This is technology that's changing the world. It's not bubble. It's not tulips. It's not seashells. It's innovation. And innovation has always driven the world forward.
I would just add one last thing on that real quick. It's just that there's two cycles, the economic cycle and the monetary cycle. And crypto assets are extremely reflexive assets. They go up a lot and they go down a lot. And so they're more tied to the money cycle than the economic cycle because they have to do with scarcity. And so when you pump more money in, that's when these assets really go up. And that's the thing to take note and to manage. It's about the money cycle.
Okay, so we're at the last couple of minutes of the podcast, okay? And since you guys have listened before, because James mentioned my mom, she always comes on at the end. I have 5 words. So I want you to give me, I'm going to say the word, and each of you give me 1 or 2 words. It's like a raw shot test, okay? All right, ready?
Yep.
So when I say the word investing, what do you guys think of?
Who goes first? Go.
Diversify.
Okay.
Putting current spending for future gain.
Okay. I say the word regulation.
Balanced.
Social contract.
Autonomy. Autonomy.
Running
That's the future. Go ahead, Jake.
Without human intervention.
Okay.
Future.
Okay. I say the word blockchain.
Innovation.
Peer-to-peer transaction.
Yeah, is that like security? I think the word security. All right, I say the word crypto. It means a lot to different people. What is that?
An asset that is secured by cryptography. Its truth or integrity is secured by its cryptography.
What do you say, James?
Liquidity.
All right.
The fact that we've got liquidity in the digital age is going to change everything.
All right. Well, the title of the book is Crypto Decrypted. It's debunking myths, understanding breakthroughs, and building foundations for the digital asset investing. And I got to tell you, it's a great book. Learned a lot. Proud to be part of it with you. And I wish you great success. And you see, I'm right on time here because the paddy wagon's coming to take me away, James. All right? All right? And I'm just asking them to take me voluntarily without the straitjacket.
Perfect. I appreciate they waited until we finished the podcast. That was very kind of them. Right? They were timing it.
Right, exactly. All right.
That's perfect.
God bless you guys.
Appreciate it. Anthony, say hi to your mom for me.